Welcome to Markets Now. I'm Michelle Work with Scott Varilek of Kooima Varilek. Grains are mixed this morning. Soybeans trying to recover. Corn still a little weakness. And then over in the livestock, we're trying to lean higher in both cattle and hogs. And Scott, it's been kind of a tough couple of days here in the cattle market. We are working on a possible key weekly reversal. Talk about what we would have to confirm that.
Yeah, thanks for having me. And talking about the cattle, I think all the cattle traders that it's finally Friday song that they play at 5 o'clock on Fridays. I mean, we're all going to be cranking that one today, I'm pretty sure, because it's been a rough finish to the week, and a couple days of smash lower trade. Wednesday we made some new all-time highs. Weekly charts. June got higher than where the April made a high at. So I mean, it was very impressive and feeling really good to only get that rug jerk real fast. And I mean, things started to break. And we're at a market that's really high. We know it's high, so then it just starts to force itself lower real quick, and you push a rock down a hill, it starts to pick up steam. That's exactly what happened. And so some of these reversal lower stuff, we made new highs on the weekly chart, and now if we close below 211, that could be a key reversal lower. Technically, you're trading higher than last week's highs and then closed lower than last week's lows. That would look a little rough on the chart. We've had some reversals along the way. One of these times, one of them is going to stick. I think we all respect that this market is at really good levels and for good reasons, but one of these times it can stick. So it's been a little hard to trust. But this would be a third day lower to see if that's going to be it or not. If funds kind of step in, or if we can get back to fundamentals. But I think that's why we're just waiting for the weekend so we can cool down, get back to Monday, and try to see if cooler heads prevail and kind of decide where the dust settles and where we're at.
Okay, so what has brought us back every time we have those other key reversals that you referenced is the cash market. And certainly the cash market was still strong here this week, wasn't it?
Very strong. We have a packer that still needs cattle, wants cattle. We have demand. That's great. Peak grilling season right now, and we know it's tighter numbers. So those fundamentals are still there. And, immediately when that board started breaking, I was surprised that the packers were out with bids. All of a sudden there was 218 bids in the South right quick when that happened. And then they did go up to 220. So I was impressed. I thought maybe the packer would grab, be a little bit more on the greedy side. Maybe it just shows how many that they need cattle. And the North was just tremendous. We had 228 last week. We're feeling great. That's an excellent closeout to have. And got some 229 trade yesterday. You could get it all day. Yesterday it sounded like, and there was some spotty 230s here and there on some small deals, but I think the bulk of it did sound like 229. And with a board that can't seem to grab yet, that cash was just hanging on strong. Packers still wanted the cattle, so that still feels good, and that we have the leverage here.
Right. And what we should point out is that not only did we get profit taking in the futures, but you got some hedge selling pressure that kind of added to the pressure, right?
Absolutely. Excellent point. It's that's what we see when these markets start to break. I mean, at an office like this, the phones start blowing up, because we all respect how high this is, and we know that we don't want to go through a free fall, from these levels, because we've got so much at risk. So you do get a lot of that hedge pressure. I think we're hedging more cattle in days like that when it's down than we are on the way up. That's why you want to kind of have your plan in place moving forward. I think at these levels, if you and maybe that is the plan. Once it's a confirmed heading lower, chase in and sell. That seems to be what the bulk of the traders do. Any of that open inventory is suddenly at risk, but the nerves are high, so very high. It's been a market where we've been trying to say, just buy puts and stay bullish. Just buy puts and stay bullish. That's not a fun way to trade. Just kind of feel like you're throwing some money at an option, but those options ballooned yesterday. I mean, they just got expensive right now. I mean, you were buying 201, kind of puts for October, and now, for the same price, you're getting 190s, 188s. Suddenly that doesn't look like it's going to work near as good as it was just a short few days ago. So definitely the hedgers, scrambled at it. Well, we'll see if we get any confirmed, going to keep trading lower or not. But that always happens on these breaks. I mean, that's why they can happen so fast.
Yeah, and just quickly, the new world screwworm. There were some headlines that you think maybe the algos caught a hold of that helped kind of turn this thing over initially.
That was kind of the thought. I mean, we're all kind of wondering why we tipped over so fast when there really wasn't a story. We
Right.
really didn't have one. And maybe, at these levels, you don't always need a story just because it is high. And once it starts to turn, yep, the nerves are, like I had just said. I mean, that's what happens. We all start chasing it. But the one thought was maybe, okay, so there was some governmental statements that they're going to start studying the screwworm in the U.S. to try to make it so make a sterile screwworm, something that could help eradicate it. That's what they did long ago. We're probably a lot better at it now than we were in the 60s. So that was just kind of the headlines was USA and screwworm, and I think maybe possibly one of those algorithms grabbed that kind of headline, screwworm US, and just sent it lower. So I mean that's a theory. I don't know if there's any truth to it, but it made a little bit of sense because that was kind of a hot new news story that was out. And we really didn't have any other reason to break. So possibly one suspect for it.
Yeah, and I have you talk about that just to point out to folks the power that the algos have in this market right now. And it's kind of unfortunate. Okay, the hog market had a nice day yesterday. We got June above $100, even though it's at about a $10 premium to the futures. We're back up in the nearbys this morning. What's driving this?
Yeah, I think it could be some of the cattle hog spreading. I mean, when you have a big up day, when cattle are having a down day like that, that's somewhere you can turn. There are outfits that do trade that a little bit more. So it could have been some of that. But, if we turn to the fundamentals just a little bit, what I keep hearing is these feeder pigs, these ice weans are getting very hard to find. Like the PED disease issue is just hanging on and not going away. It's been a story that we've had for this winter, but it's not fixed yet. We're still there. We're still scrambling to find pigs, and you can't find them. And if you want them, you're going to have to speak for them several weeks out. Otherwise, you're not going to get them. So you're having to give a yes. I'll take those 4 weeks from now, just to make sure you have some inventory coming. So it just feels like that issue isn't fixed yet. It keeps showing up, and as we're trying to refill barns here yet, when typically we're kind of moving on from that disease time frame, but we're still there. That still keeps rearing its head and maybe pumping that confidence back into the market.
Gotcha. Grains, soybeans first. We're trying to recover here this morning after a tough down day yesterday with soybean oil lock limit down on this RVO rumor of lower blending levels. We have no confirmation of it. We're trying to bounce today in the soybeans because we held the 200-day moving average. Do you think we can close higher today and negate it a little bit?
That's a good question. Yeah, trying to recover. I think you laid that out pretty nice. That that debacle with the soy oil yesterday, limit down all day and big contracts trying to sell it on that rumor. And all of the energy markets were down, so it was a nasty day for the soybeans. They just were obviously going to be down. They picked up steam lower all day yesterday, just kind of grinding lower into new lows to finish that way. And to only get 4 cents higher here today, I don't see a lot of trust here in those soybeans to where I don't think they're ready to turn the page just on themselves yet. I mean, I know we've got some less acres here for the soybeans, but we've still got Brazil's large crop and another big large crop coming. Tariff wars with China, that would probably be the next thing that would need to try to boost the soybean market, but just because that's what we keep hearing, the port that they're building in South America that China's using. So impressive. So just a continued relationship there. And it just feels like we keep losing ground there. So maybe we can get some weather issues moving forward, but to answer your question, I don't know that beans can get it. I think they maybe do for a little bit more of a correction here yet.
All right. We'll see if we can move past that story though, because boy, it really sucked the air out of the room yesterday. Yes. Okay, corn market, we're down just slightly this morning, but the July contract could post a higher weekly close here. So the big question everybody wants to know is, do you think the corn market is at least done going down?
For me, it's a value at this level. I like the price. I feel like it should be able to hold here. I thought July lost too much ground on the new crop all along. I mean, that got a lot weaker than I thought it would, and maybe the whole corn market in general. Yeah, we've got big acres. I think we know that. The crop's not made or lost yet. There's going to be plenty of weather issues to throw back at the market, but I think this corn can try to climb out of here, maybe find some end users. It's just the head scratching thing that the funds, they were long, they got out of those longs pretty quick, and now they're short. And for the funds to get short down here it's just very kind of surprising. So I guess sitting here at May 16, we're going to have to give it another 3 weeks of feeling how the weather is before anything would pop into that. But I think corn looks good at these levels. I'm poised for a little bit of a bounce from here. And if I'm an end user, I'm looking to cover some of my needs right here.
Yeah, we whacked those spreads pretty bad between July D's, but it feels like they're going the other way. And we have two totally different stories here that we're trading. Good old crop demand, but a bigger new crop, right?
Yeah, absolutely. Yeah, the way that those bull spreads got hit, I think a lot of people had their head in the chute on that one. That one stunk a little bit, so it caught us off guard.
Okay, thanks so much, Scott Varilek with Kooima Varilek. That is Markets Now.